SPY saw a pretty substantial 2-day short squeeze to end the week last week, and it happened right off of this gray trend line right here, which if you look back, this was the previous resistance that we had to break out of before starting this entire end of short squeeze that we saw back in the end of January as well as early February. And this line is critical because you can see here we retested it not once but also 2 times back around this early January time period before continuing up with this major short squeeze. So this marks the 3rd time we've touched this level, and it also prompted a pretty nice short squeeze, about 120 points so far, to bring us back above this key trend line, the yellow one right here. This is the one that came from the October 13th low. So this is very critical. However, I do have to note that this is not as bullish as it seems, at least at the moment. If you look back to the previous downtrend that was started back in August, and then we saw a uptrend that started, or at least a very short uptrend. It was only 4 days to the upside, which is followed by a pretty substantial gap down and continuation lower after that. So again, this may have seemed bullish back during this period to have 4 just large days to the upside with a lot of momentum. However, it still ended up having another downside move afterwards. And it seems this is a pretty similar scenario here, as long as if you look here on SPY's chart, this gap right here between 407 mid and 408 mid, this cannot fill. If this ends up filling, especially with a break above this channel over here, because we have 2 key lines, we have the bottom of the channel, this yellow line, and the top of the channel, this yellow line as well. We broke back into it after getting rejected from the past week, got rejected a few times off of it. We broke back into it, which is key to note. However, if this gap fills and we're able to get back above, then you can be bullish, at least on the short term, for more continuation upwards. At the moment though, this just seems like a technical relief bounce. Again, this tends to happen, especially throughout bear markets, when a lot of people get bearish and we see a lot of oversold conditions. This is just a healthy way to relieve a lot of pressure to the downside, and we had a lot of pressure to the downside because of all of these gap downs. Remember, this is a lot of momentum that we were seeing in the previous 2 weeks. We had a gap down over here, a gap down over here, another gap down over here, and then yet again another one over here, and 3 of these did not fill to the upside, which signals a lot more momentum to that downside movement. And right now it's just kind of decompressing the overall bearish momentum we saw before, which should bait in a lot more bulls as we kind of continue around this range, whether it wants to go all the way up to around 407 and get rejected before filling the gap, or if it just wants to start the sell-off after some consolidation up here. Regardless, my expectation is we will end up falling down again off of this, kind of like what we saw back in early September. And just be careful overall, because whenever you see price action like this, especially how substantial we've seen this upside move so far, it tends to make a lot of people bullish. We've only seen 2 up days so far. A lot of people that just turned bullish were not bullish back on Wednesday, on Tuesday that we saw last week. This was a 2-day rally that kind of changed the perception of a lot of people's minds just based on the upward price action and how price changed over this time, which yes, it was a substantial up move. However, you just have to compartmentalize and realize that we do need to fill this upward gap if you are to be even more excessively bullish, to go back to around the highs that we made previously. Otherwise, this is just a very short-term bounce at the moment. Now, if you are bull, there is at least some hope here in the short term. You can see around an hour before the close, we saw 2.4 million in premium for the 420 and 422 strike. This is for the 331 expiration, so this is within a month in terms of expiration, so pretty close overall. Very uncommon to see these prints. And if you look at order details over here, you can see these were at the ask, so these likely were to be bought, and these are pretty cheap overall just because, again, short expiration as well as pretty substantial out the money strikes that they bought on these. So this could be an over the weekend hedge for upside, or it could also be a directional bet. We will have to see based on price action throughout this week, although it is crucial to note that these are very short-term upside bets or potential hedges. While looking through all the put flow throughout Friday, as well as just the past couple weeks we've seen a lot of these longer term expirations. For example, 616 for both of these over here for 1 million and 1.3 million in premium, 519 also for May for the 400 strike for 1.1 million in premium, another 519 below that. So we're seeing a lot of these April plus, not even April now, it's more so May, June, July, and August plus expirations, and they overwhelmingly are bearish each time, with only about a few weeks to a month max being bullish. And this has been a characteristic of the past around 1 to 2 months so far, where these bears are adding a lot more further dated puts and then maybe potentially hedging or taking short-term directional bets to the upside with calls. And this seems to be the case here again. So do note that the bearish outlook, at least for the longer term, seems to be present, at least in the flow, with a little bit more murky waters in terms of the short-term flow. Also, it's important to note over here in the dark pool levels, we did see a $1.8 billion print at the 397.74 level. So this does seem to be a form of accumulation at this range. However, 1.8 billion, not too insane. Yes, it is a decent amount, but again, it doesn't even pass the 2 billion threshold. 3 billion and above is the kind of like eye-catching amount of premium, but anything 1 to 2 billion is just a decent amount. It's not too low, but also not too high at the same time. If we look back here to Thursday as well to kind of see if that accumulation pattern was also present, again, 1.5 billion at the 394. So this was a form of accumulation in the mid 390s range that we were seeing from this past week. Also, if you go back to Wednesday here, 1.9 billion at the 396 level. And also, we actually had 2 singular dark pool prints for 2 billion in premium. So this was definitely eye-catching to see both of these. And as of now, it seems like this was a form of accumulation. So this, again, a lot more eye-catching, especially because it was a singular dark pool print paired with 3 days of accumulation in the 1 to 2 billion range in terms of premium overall for signature dark pool prints. So a decent amount. So this does help the thesis of the upside move we've seen so far, at least the extent to which we've seen a short squeeze so far. But again, further upside cannot be confirmed until this gap over here and then these lines at the same time are filled to the upside, just because as of now, this just seems to be another one of those minor short covering rallies on the way down before some more downside. So there is some form of an argument, I will admit, for bulls, at least in short-term upside. However, my outlook in terms of odds, I still favor more downside, at least in the short to even long-term at the moment, just because we still haven't even seen a clean retest of this line right here, which if you look back, this is the one that started at all-time highs. This is the downward trend line, very critical downward trend line that we've seen. This is the main one. One could also argue that there's another variation of it if you drag this line to over here, which we did bounce off of this, but this is not the ideal one because look here, this line only attaches to the December 13th rejection date, and it does not attach to the date over here that we saw a hard rejection over here in the middle of August, as well as over here in early December. So this is not the main downward trend line, which yes, we did bounce off of this trend line, but this is still, again, not the main downward one, which I'd like to see a clean retest off of, and it should in practice act as a form of a magnet as we are around this range, especially below this white trend line, which starts all the way back here. This is the one that goes to the 2020 bottom lows, also connects to the June 17th low, and this line is critical because we are below it at the moment. We did, at least so far, see a fake breakout back above this level, the white line here. We broke back below it recently, so again, very critical that we are able to stay below, at least if you want that bearish thesis, as my expectation is. So this is, again, a convergence of both this line and also the top of this channel line, plus the gap that cannot be filled if we are to see further downside. So again, a lot of things converging around this 407 to 408 range, which should not be surpassed, or if that is the case, then it was likely to see close to another test of these highs that we had from the previous move of around 418. So 2 things to note here, especially going forward into this week and the week following. And one last thing to note here on DXY, this is very critical here. We have been consolidating in this supply zone, the white box here. Last time we hit the supply zone after a retest, it was a very hard rejection back here on January 6th. Although this time, as we've touched it, it has been consolidation so far, which is actually better, at least for a bullish thesis on the dollar, which in turn would be more bearish for equities, SPX, Dow, and NASDAQ, etc. So as of now, the fact that we are within here consolidating is actually good for a potential break of this 105.5-ish level, which would send this a lot higher to around the 107 range, around up here, because that'd be the next supply zone, which wouldn't be as strong as this supply zone here, but still a supply zone nevertheless. This is something that I'm watching for, and this could definitely support the thesis of further downside here after this short-term rally that we're experiencing on SPX. So definitely watch the dollar, especially if it retests this 105-ish to 105 mid level again, because it's likely that it will break through if that is the case. And again, if this does break through very soon, we will see some more downside in the S&P 500 and just the market in general. But regardless, should be an interesting week ahead. Best of luck with trading, and I'll see you guys next time on Wednesday.